Hi, Candice. Great to be here today. Yeah, I think today we're going to have an interesting chat. How are you doing?
How's it, Mike? All well, no complaints on my side, and hello to all the viewers.
Yeah, today we planning to unpack three things mainly that popped out of last year's AGM discussions. We had discussions last year at the Let's Get Physical events. So for those of you who attended the Let's Get Physical events, you'll know that we presented the insurance part of the mock-up AGM. And during those presentations, most of them, Candice and I took the stage and questioned and answered on what typically popped up at AGMs. What we've done is we've decided just to focus in on the main three or four, and let's just discuss them. And we thought we would share it with everybody because it's now 2026. Candice, do you want to kick off?
Yeah, Mike, I think we might have just come out of all the AGM craziness and all of that for the managing agents at year end, but I know a lot of complexes have February year ends, which mean we're going to have AGMs coming up soon again. And I think today's topics are going to really help our managing agents just sort of grapple more with the idea of those sort of difficult questions that sometimes they get faced with at an AGM, particularly around the scheduled replacement value. So I think it's going to be quite an interesting one and maybe a quick sort of mini workshop in a respect of saying.
Yeah, I think um, I think let's focus in on the schedules of replacement values because that's central to it. We won't go on the liability and the fidelity. We'll just chat about those. Otherwise, we could spend another hour online here. Um, so I think the first thing that I think we should chat about. How do you find it, Candice? You were very much hands-on. I mean, you were a portfolio manager in your previous life. So you empathize a lot with the managing agents. It's quite helpful for me. I often bounce things off you, as you know. Uh, what do you think the managing agent will think about this? Um, so one of the things that Addsure does is we prepare a schedule of replacement values for the client. Now, the Act, or the rules, the prescribed management rules actually have two rules that deal with this. So, first rule is that a manager 23.3, which basically says that the body corporate must have a valuation done. But 23.4 is quite important because it actually compels the body corporate to prepare a schedule of replacement values, but nobody does. What do you think?
I completely agree because first off, in my previous life, I never understood what that actually meant. Insurance for me was somewhere there. It came way behind all the rest of the stuff that I had to deal with on a daily basis. And yet now on this side of the table, I can understand the absolute importance of it. So yes, I never understood what that actually meant in terms of a schedule. I was fortunate enough to have some of my buildings with Addsure for many, many years. And then I started to understand the difference between Addsure policies and other broker policies. I never got something called a schedule, but also, Mark, to be very honest with you, I didn't understand what that schedule of replacement values actually was about. I think for me, I got it and I didn't understand A, how did it relate to my valuation, and B, how did it relate to my policy? In my mind, what I had to show the owners was the policy schedule. Now I understand that that's not the case, but I think 9 out of 10 managing agents will still be inclined to send the policy schedule. So I think there's a big gap in understanding of what that rule actually means, and the fact that if the trustees aren't doing that schedule, does it not mean that the managing agent actually is supposed to be doing that schedule? In which case, I know a lot of my managing agent clients will completely back away from anything insurance related because they're not qualified to discuss that. So I think for me, understanding that schedule of replacement values back in my previous life, I can now safely say to you it was sorely lacking. I didn't understand what the connections were. So maybe we can close those dots today.
Yeah, no, that's a good one. I think, and we understood it as brokers, and we were always trying to impart this. But until you came onto our side of the table, I never fully understood the best way of actually getting it across. So let's see if we can achieve it today. Okay,
Yeah,
so um, I think the first thing is the rule says you've got to prepare a schedule of replacement values. Now, I understand. I've actually spoken to quite a few managing agents about it, and I do agree with the managing agents. A managing agent is not necessarily, and this comes from managing agents, this is not from me. Managing agents themselves have said, look, Mike, we're not qualified to actually collate the information. In other words, take the information from the value, from the valuation, and then transcribe it onto an insurance type of schedule. I
yeah,
understand that. So, whilst the body corporate needs to prepare a schedule of replacement values, I think the broker needs to get involved, and that's why Addsure does it. Okay, so I quite like the fact that other brokers aren't doing it properly because that's one of our, call it, differentiating factors on why, what
mm,
we actually boast about. But it's definitely a schedule separate from the policy, and it's something that should be prepared, you could say, on the body corporate's paper. Okay.
yeah,
If you do what most managing agents are actually, I'm going to say most, but it is the fact, they go to the policy schedule, which policy schedule should actually mirror this thing. It's supposed to actually, what most of them call it, a PQ schedule, which is also technically incorrect, but it's the PQ type of schedule-y looking thing that's in the policy schedule, and they photocopy it, scan it, and they send it out with the AGM pack, which is technically incorrect
yeah,
because the rule doesn't say you must go to the policy schedule, photocopy it, and then enclose it in the AGM pack. It definitely doesn't say that. It actually says you've got to prepare. And there's good reason to prepare it because now you've prepared something, you send it out to the to the AGM pack, people can consume it, which they don't do, and then they theoretically can go to the AGM and then vote on it.
yeah,
And then after the AGM, you go to the insurance company, cart after the horse, and you then say to the insurance broker, now the policy needs to match this thing which we've now approved at the AGM.
mm.
That's legally what should be happening. Does that make sense? Are we getting?
Um, it makes sense to me now in my current life. In my past life, I would probably have said to you, I don't really understand that topic on the AGM because it's a set agenda topic. And in most cases, I think people are there to just say, yes, I agree. And they'll look at the monthly premium. How many units? What does insurance cost us per month? And they think that's what they're voting on. They don't understand that they're actually voting on the replacement value of their section plus their share in common property. I think that that is completely misunderstood. And I know attending some AGMs, I can see that it gets completely brushed over. It's almost like, let's hurry through this. And as long as the premium per month seems to be okay, let's approve it.
Mm,
And I know that there would be literally, I think, only one insurer really that does that PQ schedule. What do the managing agents do with the other insurers who don't provide that to you? So, what exactly are you trying to vote on at that meeting when all you've got to send out is your policy schedule itself?
mm,
And then how are you working out your rate per square meter in terms of insurance? Because now I know there's so many other things that go into that,
mm.
all the technicalities, which, for example, our schedule really lays it out
No,
step by
correct.
step,
I'm gonna
clear,
I'm gonna put
plain
it
as
up
daylight.
here. So I'll put it up here. So as an example of how we lay it out. It's also in our booklet. So
Yeah.
we go into quite a lot of detail in our booklet. The link we'll also put with this video. But the actual sample, here it is. And you can see there that we've actually even summarized salient parts of the valuation. Now, remember, the valuation might be 2.5 years old
Yeah.
because you're supposed to do the valuation at least every 3 years. Some of the larger schemes, 300 unit type of buildings upwards, even 200 unit buildings upwards. I would definitely do it more regularly than every 3 years. But at least every 3 years it should be done. But in those in between years, you know, you need to account for inflation. Now, that's why I think the broker, I don't expect the managing agent to prepare it, and certainly not the trustees. But the fact that the body corporate must see to it that it's done, I think you
Yeah.
need to try and encourage your broker. If your broker doesn't know how to do it, change your broker, in my view. I'm not saying come to Addsure. I
Mm.
know that there are other very good brokers who specialize in sectional title, but you need a broker who understands how to take the information from the valuation schedule, which is also very important to get that part right, bring it across onto a schedule, and then prepare it in draft format before you even go to the policy for the trustees to present at the next AGM. I think that's pretty important. So yeah, it's a matter of getting your broker to do it really, and then having this as a sample to put out, and then I think, Candice, you're very good at explaining. I've heard you present it at AGMs. That's another thing. As brokers, we do. We're happy to attend our client AGMs and actually do the presentation ourselves for you, but especially if they're online. But you present very well. You explain that up until the AGM, the responsibility of the sums insured are strictly speaking the trustees, because if you've agreed to increase the sum insured at renewal or whatever, but at that moment when you vote for your schedule, and I like the way you explain it, you're passing over that responsibility to the owners, and the
Mm.
owners are taking the baton off the trustees, and the trustees are almost shedding their
Yes.
responsibility. Does that
Yeah.
make sense?
Yeah,
It's so
I see it
important. Yeah,
as offloading. But then also just coming back to understanding the link between the valuation, the schedule, and the policy, and how those three need to link. Because if there's a missing point there, you're just working off your schedule where you could be underinsured, overinsured.
correct.
And even now I'm going back more to the intricacies of day-to-day managing agent life, is that you have to have everything free and fair to all. Now, I have one unit, for example, who has an elevated replacement value that their bank has requested. Why is that person not paying the additional premium? And without the scheduled replacement values, that additional sum insured is not actually correctly recouped from that particular section, which means all other members in the body corporate are paying for that person's higher replacement value. So I think even down to the day-to-day items, that schedule of replacement values is so important. And I think the owners don't understand that because sometimes they don't get that schedule. So let's say it's an Addsure client, we need to make sure that they are getting that in their
Mm,
invitation, as opposed to just getting the policy schedule. I mean, I know that we've spoken about it before, that the policy schedule should not be given out in an AGM pack because you're committing yourself to whatever that content is, like
mm,
excesses, limits, and someone's going to hold you to that.
mm,
And now your AGM is going to only happen next year, but in between that, you've had another renewal. Maybe you've had some corrective actions taken place, excesses have changed.
mm,
The managing agent has that responsibility now to reissue that to all the owners. So I
mm,
just think it's so much better to have an extrapolation or a
mm,
schedule that draws all the salient points from the policy, and that's what you actually are publishing, because that's what that first point is on the AGM is the replacement value. And the policy schedule doesn't tell you the replacement value. It tells you the sum insured overall and the monthly premium.
No, you're quite right. So you've covered quite a bit there, and I'm going to reiterate some of the points that you make. So I agree with you 100%. I always say, please don't send out the actual policy schedule. Now, a lot of the managing agents are intentionally sending it out because they feel it's transparent and it's sharing the information. I
Mm.
get that.
Yeah,
But the dangers are as you've raised. And I think the biggest danger is number one, the excess changes and those points. Agreed. And terms can change. But one of the
yeah,
things I see is sometimes in the policy, there's a little bit of personal information.
yes,
First National Bank is bond for number five. And number five's bond is taken up to another 300,000 Rand.
yeah,
I don't really think it's necessary to tell everybody who Joe Bloggs' bond is worth, quite
yeah,
frankly. And you say, oh well, it's only for our 10 units in this. Well, hang on. Actually, it could be shared with an estate agent who's sharing it with the general public. So it's
yes,
not
yeah,
us. The schedule as being an AGM pack. Anything in an AGM pack, in my view, is fairly public.
public.
So there's a little bit of personal info. And remember, marketing people are very clever. They come in and they get hold of these packs, and especially with AI these days, you can actually draw out quite a bit of info that you might don't want shared. So I think that also just puts your information at arm's length. And let's face it, schedules have policy numbers. Do you want
Yes,
the public to have access to your policy number, which opens the door to fraud? I'm not
yeah,
going to,
make claims that are not valid.
I always say publicly, I'm not going to give you those reasons because I'll be giving people ideas. But it does open it up to fraud when you share that information. So be careful. Then another thing, and I'm going to put an example up here, my own complex. So what happens is when you just photocopy um, and you're showing it like this. Sometimes the insurance company who've done it, they don't understand the stuff. They're an insurance company, they're not a sectional title company. And they have done stuff or structured stuff incorrectly. Now, in my case, I'm using my own scheme, I'm crossing out the name. Um, they've actually shown the common property separately. Now, that's also wrong because now the common property is not included in the unit sum
In the
total.
units.
So when you're asking for an insurance certificate, you're actually understating, in my case, by 20%. So now that's not fair because now somebody might need an additional sum for their bank unnecessarily. Now, it might only be costing an extra 20 Rand a month, but you know what? It's
Yeah.
20 Rand that owner should rather be buying themselves a packet of biscuits with. Let's just do it right. Let the insurance broker do it for you properly, separately. Just say to your broker, yes, if you want to be our broker, you're going to have to prepare a schedule for us. That's the deal.
Mm.
That's my view.
And I think if a schedule is done, you have the opportunity to allow for the insurer to put together an accurate policy. Like, for example, I know on our schedule of replacement values, we go right down to door versus section number.
Another
And quite
point.
um, you might be talking about door 5, but it's actually section 32. And if that's not laid out carefully and having something else to cross check, then maybe the value for section 5 is actually not the value for door 5. So I think there's also
That's that's
that
that risk.
aspect.
There's that risk. But also, when it comes to geysers and things like that, what we are finding very often is when you get your claims history and you're trying to work out, but hang on, wasn't this geyser changed 3 years ago? It's within the 5-year warranty, but you haven't got necessarily all the records because it was taken over and handed over, and now you're looking at this lot. And actually, what's actually happened. They've actually used the door number instead of the section number,
Yeah,
vice versa. They haven't
yeah.
got it on track properly. And so, the insurer won't sort out somebody's warranty because, whatever. So you've got to, yeah, there are a lot more reasons to
Mm.
getting it correct. Yeah,
And I think also one of the items that you explained to me when I first joined Addsure is the danger of having double VAT because you've got a valuation that's got all of the different professional fees and this and that, and that's maybe there. And then you have your client in a position of double VATing because the policy doesn't relate back to the valuation and there's no. So I really now understand that link between the three documents, if I can call it that.
yeah, and then the escalations as well. I'm not going to drill into the escalation. We've got another video on escalations. Here, you can go and see this one. It's actually goes. I've done this very graphically, so you can actually go and drill down into it. But the escalations, which is the inflation part, some of the valuers actually include the escalations and that, as you quite rightly said, but particularly the escalation in the valuation, and then the insurer adds escalation again, which could be 20%, could be 30%, and you're paying extra premium maybe for nothing. So yeah, it's another good reason. And I'm telling you something now, it opens the managing agent up to risk if you're doing that. Because if I'm, I mean, you don't want Mike Addison being in that AGM or Candice Persson being in that AGM because you're going to say, but hang on, Mr. Managing Agent, uh, we've been overcharged 30%, and this is a big building. 20% of premium. Are you going to pay that back to us? Or the trustee's going to pay that back to us? Who's going to pay? So you don't want that question. Again, the importance of preparing a proper schedule by somebody who knows how to do it.
Yeah.
Mm.
Mm.
Yeah, I think we've killed this subject. I think mainly those are the three real main aspects that climbed out of the additional sums column questions at the Let's Get
Yes.
Physical events last year. Um, you know, um, can you think of anything else, Candice, in closing?
It was more a case of really being presented with the scheduled replacement values and having questions from that because a lot of people hadn't seen it before and a lot of people didn't understand that link between valuation, schedule, and policy and how that all needs to meld together.
It needs
So
to
I think,
melt. You're quite right. It needs to
yeah,
melt together
yeah,
properly. And actually, you've just um, raised something which is worth sharing. So the rules actually another rule which is actually 23.1A or something. Can't remember the rule. I'll put it up here, but it actually says what's got to be in the policy schedule itself. So it's actually even a separate issue, and the rules actually say that the policy schedule has got to have each person itemized with the total showing. So you've got to have the unit sum totals with the total, which basically says, it doesn't say so, but you can deduct from
mm,
that, don't separate the common property. It's got to have the unit sum totals.
yeah,
So you're quite right. It's got to, from valuation to schedule of replacement values to policy schedule. It's got to be almost in three of those in that consecutive order.
yeah,
Um, but when it comes to claim stage, what I've seen happen, and it's one of the buildings that you managed many years ago when there was a huge flood from the top of that hill. Remember that water pump? Won't mention the name. But I remember the loss adjuster came up to me and said, and I said, well, here's a schedule of replacement values, which is quite accurate. And, and then there was another one. I remember out in Benoni when this huge hailstorm occurred, and I was very proud to be able to say the trustees actually had a valuation done. Here it is. Here's a proper schedule of replacement values which matches it with all of the additional sums correctly structured. I'm telling you that loss adjuster's quantity surveyor was like, wow, I don't even
yeah,
have to analyze it. And the claim didn't even stop there. It went right through the stop street because that was a big stop street normally. So
Definitely.
yeah, so it even helps at claim stage.
Yeah. So that one claim that also was from one of our larger estates, where there was quite a significant amount of damage to the common property, because of our schedule. It was so much easier for that loss adjuster to quantify the common property aspect as opposed to having to go back and try and work it all out, because obviously the policy is not showing everything in terms of clubhouse, gymnasium, squash court, this, that, whereas ours clearly outlines that it made that step in the claim not even a step.
No, absolutely.
Definitely helps. Yeah. Yeah.
Okay, so bottom line, do a proper schedule of replacement values.
Yes.
Okay, everybody, see you again. Don't forget, please like, please share, and of course, the most important thing, subscribe. We'd love to have you as a subscriber on our channel. And it doesn't mean you're going to get any junk mail at all. I don't even have a
Mm.
record of it. It's there at YouTube. But at least when we post a new video, you know about it. That's the whole idea.
Yeah.
Okay, see you.